I'm going to talk really fast and just kind of run through a bunch of things that we've seen happening recently. Most of you probably know kind of how Heavybit works. You know, it's a 9-month program for companies, specifically companies that are making developer products, right? So because it's so narrow, we actually see a lot of patterns and a lot of companies come to talk to us, and we have a lot of visibility across sort of just what's happening. And we also have sort of two buckets of companies. The earlier companies are sort of post-seed funded, and the later companies are sort of post-Series A, post-Series B companies. So we actually have member companies of both types, and so we kind of see data across sort of the whole sort of life cycle spectrum. Which is kind of interesting. You know, there's 22 companies in Heavybit now, 45, 50-ish founders, and several hundred employees. And so it's actually kind of starting to become an interesting index on this like tiny part of the market, the industry that we're in. So I'm just going to kind of run through some of that stuff. These are kind of the main sections. Just I'm going to talk about why 2014 was kind of crazy. A few specific interesting patterns that we're seeing. I've got like 7 sort of categories that I was going to just touch on that we're seeing just a lot of energy or things going on. I was going to talk about the New Relic IPO just for a second because I think it's actually really important and meaningful for us. And then just real quick thoughts on 2015. You know, basically 2014 was a really big year. It was super busy. The number of startups started and venture capital raised and people hired and all this stuff is just unbelievably crazy. A lot of reasons for that, most of which you guys are somewhat familiar with. But what's really interesting is there's been a sharp uptick in seed fundings and also starting to be an uptick in Series A companies. And there's also been a really large uptick in the number of employees in pre-Series A companies. I think, you know, this is important for us, for dev companies, because while it's important to remember that startups are not themselves a market that you can grow a large business serving, they are a very important early adopter for dev tools, and they're also very influential in the sort of buying process and sort of trend setting, let's say. And so it's actually a really good thing for all of our companies that there's just more of these guys being started. These companies have teams that are scaling quickly, software that's scaling quickly. They all need a lot of the solutions that we make. So I think that's really exciting, and it means that next year there's going to be a lot of demand for these things, somewhat regardless of what happens with the funding process next year, because most of these companies have been started recently and are well funded for another 12 to 18 months. So that's kind of interesting. Specifically within the developer space, I don't know how much you guys see this, but I mean, the number of companies that have been started that are making solutions or tools or products for developers is just staggering. I mean, it's staggering over the last 5 years, and accelerating the last 2 years, and the last 6 to 12 months. I mean, Tom and I and the team here have seen just so many companies. It's really unbelievable, and I think it's a really exciting time. It also means that there's a lot more legitimacy coming to the space, and a lot of big companies are starting to really get into big buying patterns, which I'll talk about in a minute. There's a couple other good data points, like Y Combinator did their request for startups just before this last application cycle, where they asked specifically for companies building developer tools. It's just one data point, but I think it's sort of a loud signal. Specifically, what seems to be happening across companies, especially when we look at companies that are really starting to get their sales cycle going, that are in the single-digit to double-digit millions in revenue, they're starting to see real increase in traction in larger companies starting to understand and internalize the value of developer productivity, finally. And this is something that for some decades has been a bit undervalued. And what seems to be happening is there's an increased sort of understanding in the collective consciousness of these bigger companies that, firstly, I should back up and say, software is eating the world. All companies are software companies now, right? And so all companies, in order to be agile, in order to be competitive, have to build software and have to build software quickly. Therefore, developer productivity, and therefore developer tooling, is actually really strategically important, increasingly to all companies. And that's a really big deal, and people are starting to really understand that. They understand that if you can't change your product, your services quickly. Changing those things quickly means building software quickly, developer productivity, developer tools, right? So that velocity of product change, if you can't get that, you have huge opportunity cost, and that grows bigger and bigger the bigger the company is, the bigger market you're in, right? And so companies are starting to realize that and understand that, and that is sort of the basic value proposition that every single developer tools company is effectively making, regardless of what type of thing you're specifically doing. Relatedly, business sort of agility, right, is really a competitive advantage. And so because the business world now, even at large scale companies, is so agile and there's just so much movement, all of that agility is driven by the ability to change software and build software quickly. And so there's starting to be real traction there. A couple of specific things I was going to point out that might be really useful to understand for you guys, if you're not seeing this already. Marketing. The marketing department, marketing groups at large organizations, we're seeing that continue to be an incredibly large driver of large-scale deals for developer products. And one of the reasons is, this has been true for the last couple of years, but really increasingly so recently. And it appears that the reason is that the marketing department is frequently bounded by something external, right? They're doing a huge marketing campaign, they're rolling out a program, and it's bounded by external timing or other external commitments. And so they have no choice, and they have to come to the developer teams and say, hey, we need to build this social mobile app to go with our campaign and blah, 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 and it's got to be done in 3 weeks. And the developer teams are generally saying, okay, we can only get that done if you let us use X, where X is the thing that they love, that they really want to use at work, they have previously not been allowed to use at work, which is usually one of your products. And that's really one of the big ways that these things get into the company, because the marketing team and usually these projects they're doing are very important to the business. And so that marketing manager, or that marketing manager via the CEO, generally has the ability to override the existing rules in the organization, and does in these cases. And so this project happens and it's limited in scope, but if it's successful, that tool set becomes permanent at that company, and they do more projects, and more developer teams in that group kind of want this. And so that's really a huge wedge into companies. And we're just seeing that over and over again in big sales deals. Related to that is digital agencies. So you guys are probably familiar with this. Digital agencies are sort of a combination of sort of the old school advertising agency, sort of creative, strategic stuff with people who write software. So digital agencies are basically guys who help large companies who might not otherwise have the competencies or capacity internally to build cutting edge software and apps, help them figure out how to build those apps. And so a big thing that they pitch, these digital agencies pitch, is their ability to build things that the companies have never seen before and do it really quickly. And so these agencies are always on the lookout for bleeding edge technologies that they can use to build something new to serve their Fortune 100, 500, Global 2000 customers. And this is really awesome for startups, because they're specifically looking for your tooling to give them a sort of a foot up. And if they choose it and they use it successfully, that you will have indirectly gained a really massive, big logo, important customer. And so this is also proving to be a really important distribution channel, indirect partner channel, et cetera, for a lot of our companies. So if you're not already thinking about that, looking for that pattern amongst your use cases, or figuring out how to accelerate that, you should definitely think about it and look into it. And we have a number of people we can connect you with who are doing that well right now. Last thing quickly is just sort of the models for on-prem software. It's no secret that I am not personally a huge proponent of on-premises software. For me, the problem with it is that it historically has been sold in such a way, you buy software, it comes with a lot of human-powered stuff that's low margin and doesn't scale well, like support and operational installation and customization. And it frequently slows down the development velocity of the company that's selling it, because there's this fragmentation of the install base, and it's hard to deliver updates. It breaks down the continuous delivery process. And then on top of that, customers, even though there's a tremendous demand for this, they often are not actually successful with the solution. And so for me, I have a bit of an allergy to it, but there are certainly cases where it makes sense, and models and products where it makes sense, and we're seeing a couple of things starting to work there that I think are actually really promising. One is this sort of hybrid model where the way that people are selling on-prem software, especially if you're a SaaS business, you're a SaaS developer thing, and you've got constant demand from the customers who want an on-prem version of your thing, people are finding ways to still keep most of the benefits of the SaaS model. So one thing they often do is, it's not a purchase of software, but rather it's a continuous subscription, a continuous licensing of that software that comes with continuous delivery of updates, which is actually what you want as a startup, so that you're keeping the development velocity high. And frequently you're also actually managing the installation inside the firewall. So they're sort of giving you servers, and you're reaching in as a startup and running it as a service the same way you do the rest of your SaaS offering. And so that model is both, in terms of the business model and the sort of delivery model, it retains a good portion of the stuff that we think is good about SaaS. And so if you're going to do on-prem, trying to do it in that manner, I think is really important. And this other thing, this is really specific, but I've been really surprised by this, and it's a really quickly growing trend, which is that large companies are starting to treat VPC as if it was on-prem. So, Amazon has this virtual private cloud, and the idea is they take a bunch of their machines, they make them dedicated machines so nobody else is on them, and you can set up your own firewalls and IPs and all that stuff, and then you can do a secure VPN from that sort of cluster to your internal behind the firewall stuff. And what's really interesting is, and I've really just been seeing this in the last 6 to 12 months, a number of large companies have started to treat their Amazon VPC installation as if it has the same rules as on-prem. So they want an on-prem thing, you can deliver it via Amazon the same way you might be doing your other stuff, just into this particular sort of availability zone basically as a VPC, and that satisfies these large customers. And so now this is not a huge, widespread trend, but the frequency with which this is starting to come up and the size of the deals that are happening where this can be done is really, really interesting. So if you're in that position and you're thinking about how to deal with that model, that's something to really look into. And already you can see from the traction that Microsoft and Google and the other guys that are thinking hard about this sort of enterprise public cloud problem are moving in this direction and trying to clear the path for that. So anyway, I just think that's a really interesting thing that's sort of new and happening. So I'm just going to tear through these and talk kind of fast. There's sort of seven big buckets. This first one's kind of a hodgepodge, but it's generally this idea of just the continuing movement forward of continuous development and continuous delivery, which to me, those two things are it's sort of a spectrum, which kind of represented by that vertical arrow. And there are a number of companies in the Heavybit family that are working on areas in here, but every single line on this slide is an area where we have seen literally dozens of companies this year that have been started that are doing something interesting. There's a lot happening in the coding tools space, new types of tools, online IDEs, ways for people to reduce the difficulty of local tooling, local setup, or obviate it entirely and do the whole thing in the cloud. A lot of work going into this idea of trying to get sort of parity between development and production, or dev staging production, a lot of container work, a lot of people sort of nibbling around the edges of that problem, and nobody's really sort of cracked it yet in a coherent way, but there's so many companies working on it that I think this year there will definitely be interesting things happening there, and that's something to watch. And then of course there's the general sort of build, QA, continuous integration, testing kind of stuff, it's super important because everybody has to do it, and it's really strategic because all the other tooling that developers use, that's sort of the center point that a lot of this tooling can tie into. Obviously, CodeEnvy is one of our companies that's working on this, dev prod parity type thing, as well as sort of the IDE problem. And then, Gradle is rapidly becoming sort of the standard for build, sort of build tooling and build infrastructure pipeline. Rainforest is a really cool QA solution that's designed to allow non-programmers basically to do QA work, which is really important. And then, Circle's sort of to me, I think it's like a really sort of pure example of like the modern way to do continuous integration on, in the cloud. Like I was saying earlier about every company becoming a software company, because that's happening, every company also has APIs and wants people consuming their APIs. And so every company now wants to have an ecosystem around their APIs. They want to have developers on their APIs. They want to have developer evangelists. And so APIs are becoming a really, really important area. Not that they weren't before, but the pressure is really building there. So Apiary is another one of our companies that I don't know where to put them on the slide because they kind of span this whole area where they help you design your APIs and develop them, but also deliver them continuously and run, create automated test harnesses and documentation, all that kind of stuff. Super important. And then obviously you get into continuous delivery and release management, and then all the stuff around metrics and monitoring and analytics. And there's a huge amount of stuff happening there. I've seen probably 10 companies in the last 2 months that are trying to apply some kind of deep learning or machine learning to large like log or metrics data sets to understand operational performance of distributed systems. There's not just one company or 2 companies doing that extremely obscure specific thing that I just said, but like a dozen companies in like 2 months. So, it's just unbelievable. And of course, there's a lot of data being generated by all this stuff. So just solutions for managing the metrics are massive. Librato is one of our companies that does this specifically. And then, I put Keen and Treasure on here, Keen.io and Treasure Data sort of grayed out because this is not really the main thing they focus on, but because they are solutions for ingesting tons of data and then understanding it, a number of people are actually using those products for this purpose. And then, of course, you get into complex debugging and understanding what's happening in distributed systems in production, right? And so those are companies, for us, are companies like RunScope, which is another API-oriented company, but it's specifically designed to help you understand the problems you're having in production around consuming other APIs. And Takipi is a super cool thing for Java that allows you to do debugging in production for Java processes. And I mean, these are all just, I'm just kind of using the examples from our family that we know really well, but for every one of these categories, there are so many companies right now that have been started this year, last year. There's just a lot happening, and and PagerDuty, when you get into sort of receiving these metrics and monitoring, and then going into alerts and incident response and all that stuff, PagerDuty is a company that I sit on the board there, and I have since sort of the beginning, and it's just been unbelievable watching this company. I mean, they're great guys, and they've executed amazingly well, but in addition to that, the amount of organic demand for their product is just staggering. I mean, they basically have everyone as a customer now, and that includes people who, it includes all the guys who you think of as being really smart about modern sort of reliability engineering, but it also includes a massive portion of the Fortune 100, 500, et cetera. And so you look at them and you see that these massive companies that you would not expect to be able to keep up, who are basically adopting this tool and using it in a way that's consistent with the best practices that startups do. And so I think that's a really interesting, I mean, this is true for a lot of these companies, but PagerDuty at the scale they're at, you can really see it happening every day. And so I think this whole spectrum is continuing to evolve. All the tooling along the spectrum is continuing to be replaced. And I think it's a really, really important area. So I mean, I guess the takeaway for me from this is that whether you're working in this area directly or not, thinking about the changes that are coming here and how the sort of changing of the guard of all the tools along this whole spectrum, how that affects and impacts not only the way you do things, but your product and opportunities for partnerships and marketing and product design is super important. Anyway, that's a lot of stuff. Big data weirdness. There's more data now than there was yesterday and the day before that and last year, and there are a lot of problems. Basically, we're seeing a lot of interesting things there where Hadoop is still really heavy, right? Like we still see people using Hadoop all the time. However, we're increasingly seeing people being not happy with Hadoop or having a really hard time getting it running. And of course, Spark has become really big, and there are a lot of companies that are trying to help you run Hadoop, right, in an interesting manner. And there's some enterprise guys like Cloudera and Hortonworks who just IPO'd a few days ago successfully, which is a good sign. But those are a little bit more enterprisey solutions. Treasure Data is one of our companies that is specifically focused on Hadoop, and they're actually one of the few companies that is running Hadoop as a service and being, they're crushing it revenue-wise. So they are one of the few that is commercially successful with that. So I think there's some interesting things coming there where people aren't happy sort of with the way Hadoop is behaving or their ability to run it, but people still have all these data problems. And so my sense is that there's a change coming there. I don't know what it is, but I think there's a change coming soon. Obviously, Keen and Librato both do other types, non-Hadoop oriented sort of types of big data ingestion, analysis, visualization, etc. Containers, I don't want to talk about containers too long. Containers are a big deal still. There still is not a huge amount of evidence of interesting real world use cases, but I think this is actually going to be the year that changes. One of the reasons I think is that all the orchestration stuff is starting to finally come to fruition. It's been clear to most of us for a long time that orchestration is like the important part of the problem. Like containers are really great, for portability and standardization and a number of other reasons, but you can't really do anything with them without orchestration. And so orchestration is kind of on the horizon. Docker's rolled out their stuff. CoreOS is getting into that sort of business. So is Mesosphere, and there's just a lot happening there. Personally, the thing about containers is they're great. They're better than not having containers. But I'm of the mindset that we want a higher level of abstraction than that. We want developers to be able to just write an application and not think about how to run it. And certainly managing the orchestration of containerized software across large scales, pools of resources, that's better than the current status quo, but it's still way too low level, and developers shouldn't really have to do that, in my opinion. And so it's great that it's exciting, but I'm kind of bummed that there's so much developer mindshare going into that right now instead of trying to figure out how to sort of make all that stuff invisible. And I'm hoping that some of the orchestration guys in the course of competing with each other will kind of try to up-level the solution to that level, but it's probably not going to happen this year. The other thing that's worth mentioning, I'm sure you guys have seen this happening, but war is upon us basically in the container space. There's a number of companies, many companies working in that space, but particularly Docker, CoreOS, and Mesosphere are 3 companies that are doing interesting things that we have all known for a long time, or probably on a bit of a collision course, but I personally didn't think they would collide for a very long time because they're all working on different, separate, important aspects of the problem. But over the last couple of months, we've kind of seen that probably is not going to be the case. They've kind of brought out their queens very early, to use a chess analogy, and now they're basically going to war. I mean, they're also friends, but they're also going to war. So it's going to be I think it's going to be a very tumultuous year in the container world, which actually has pretty broad and deep implications for all of us, not only in our day-to-day work, but in the markets that we're trying to sell things into. Application architecture, the big trends there, I mean, the couple of big buckets that we see continuing is, number one, mobile fragmentation is just like a huge disaster, especially among bigger companies. So all the biggest guys with huge consumer footprints, guys that are e-commerce, media companies, this is killing them, right? They've got separate teams for their web apps, their mobile web apps, their iOS apps, their Android apps, and it is absolutely impossible for them to keep all this stuff working. And they are this is a hair on fire problem now, and they're so thirsty for solutions. Though it's not clear yet what those solutions are going to be. There are people working on specific parts of that problem that are really promising. Some people are trying to figure out how to make it all web stack and no native stuff, but feel like native, right? And sort of the company Famous, and then with their JavaScript framework is kind of one of the leaders trying to do that, but it's very early. At Portable, who's one of our recent members, is directly working on this problem by allowing you to cross-compile Objective-C to run on Android, which is a really interesting and difficult to achieve solution, but it addresses just one part of this sort of giant mess. And so I think that's an area you're going to continue to see a lot of movement in, and the more you can orient your products around helping with that problem, the more traction you'll have, especially with larger customers. There's this whole smart client thing, or whatever we're calling it these days, where this is sort of the Ember or Angular running backed by Firebase or whatever type of structure. And for a while it was sort of this question of like, well, is this stuff going to be is this like a sideshow? Some interesting apps will be built that way for certain kinds of things. It seems to be appearing more and more likely that this is going to be the main way that things are done in the not too distant future. There's a huge amount of movement there. You probably saw the Firebase acquisition is a really loud signal around that, particularly the guy, who bought them and what they're planning to do, and how sort of important that is architecturally. JavaScript continues to be everywhere, all the time, good or bad. It's ubiquitous, and there are companies that are doing interesting things with it. Meteor is one of our companies that I think is probably one of the leaders trying to build the next generation framework in JavaScript, but JavaScript is certainly continuing to be a place to watch very closely. And then I'll just mention microservices just for a second, because it's kind of annoying, but microservices is sort of not anything new, right? It's the stuff that's sort of the set of ideas that we've been all thinking are good for a very long time now, but they now have a name that people like. But there is some cogent thinking, some clarity, some galvanizing thoughts about it now. And if you want a good read on that, I put a link on here. The ever classic Martin Fowler has written a really nice article very recently about microservices on his site that is kind of clarifying if you're into architecture, if you're an architecture nerd. But anyway, that's going to continue to be a thing. I just wanted to show these real quick. These are Google Trends charts that I just pulled up this morning. This top one's quite interesting to me. This is Ruby on Rails versus Angular. And what's interesting to me about this chart is that just now at the end of that chart, Angular and Ruby on Rails, the lines cross, right? What does that mean? I don't know, but probably something, right? So I would keep an eye on that. The Ember, and there are a number of other things that have chart upticks that look like Angular in this period. But But Angular in particular is really taking off. And then just for fun, I put the microservices thing on there so you can see that it was never ever used by anyone ever until 5 minutes ago when suddenly everyone started using it. This fifth bucket, Tom and I jokingly call the help scientists bucket, because we just don't even know what else to call it because there's just so many different things going on in there and they're all overlapping. But I'll be curious to hear if you guys have seen this the way we have. There's a ton of companies that are trying to help scientists, statisticians, mathematicians, or other just non-programmers who are doing, plausibly technical work, trying to work with large amounts of data or understand data to do so. And this ranges from guys that are trying to take good statistical tools like R and MATLAB and make them better in some way, more accessible to non-programmers, online in an IDE, able to work with larger sets of data and scale out automatically, all that kind of stuff. We're also seeing a lot of machine learning as a service guys. I'm not aware of any that are really commercially viable yet, but there are a huge number of these companies that are basically saying, look, bring us your data, we'll do all the machine learning fancy stuff and extract the features, and then you can just like play with the weights or whatever. And it's not clear whether that's gonna work, but staggering number of people working on this. I mean, we've seen, I wanna say 6 companies in the last 6 months, last 4 months, that are doing something like this. And relatedly, separate set of companies, we've seen 10 of these algorithms, marketplaces, some of which are machine learning or deep learning related and some are not. But this is kind of the same idea, right? Like bring us your data, we'll run all these fancy algorithms on it and give you the results so that it's accessible to you as a developer without having to run a whole cluster, or it's accessible to you as a non-developer in some cases. There's a lot happening there, and I expect there actually to be some interesting cracks in that sort of, somebody's gonna crack that market open this year. And there's yet more container stuff going on with all of that. Of course, there's also the always popular new ways of doing programming or avoiding doing programming. But there's a lot of interesting stuff happening there as well. Certainly our company, member company, Kodua, which is the maker of Lighttable. Lighttable itself is a really interesting sort of bleeding edge, cloud IDE coding tool, but their product that they're totally focused on now called Eve, which they just announced recently and is Andreessen backed, is specifically this last thing. It's specifically a way to sort of do programming in a new way that's not really programming, that's not just for programmers. And there are a number of companies working on things in that space. I think that's important because these are actually hard problems, and making the power of programming and scale out accessible to non-programmers is just generally socially really important, but it's also a huge business opportunity. And I think that there are going to be intersections with a lot of these things with sort of the big data technologies and a number of the dev tooling areas that you guys are working on. So I think that's also an interesting area to look at. Internet of Things and hardware. Internet of Things, what does that mean? I don't know. Ubiquitous computing, maybe it's quantified self, health, etc. Maybe it's just that like all of our toasters, have Wi-Fi or whatever. But basically, one thing we do know is that there's lots of data coming out of that stuff. And so like a lot of companies that are building Internet of Things don't know what to do with all this data coming from all the toasters, or more realistically coming from all the cars and solar panels and variety of things. Treasure and Keen both have a number of customers who are customers, big customers, solely because they have a ton of data coming from Internet of Things and they don't know what to do with it. And that's a place to put it. So that's going to continue to grow very rapidly. It's a huge uptick. And also the part that I'm most interested in is the intersection of hardware and software. So, the tooling previously for programming hardware and using it was pretty poor by like web development standards. And what's starting to happen now is it's starting to look more like real software. It's starting to look like a real stack, and there are a number of companies doing interesting things there. The Spark guys, who are our newest member, have a super cool product, the Spark Core and now Photon, which it's an open source piece of hardware that you build into your Internet of Things devices, and then their software tooling and cloud service allow you to actually develop software and deliver it continuously in a manner that is more like what we normally think is good for web development, which previously wasn't really possible and is super important. And there's a bunch of other companies doing interesting related things in that space, and that's an area I'm personally really interested in looking at a lot. We've been talking to a lot of companies there. Sort of related to that is there's a lot of drone stuff that's on the software side. So companies like Drone Deploy or Airware that are thinking about how to make it easier to write software for certain specific hardware platforms like drones. So I think those aren't like, I think they're starting to not be crazy sci-fi anymore. I think they're actually, people are doing things with this stuff, and it's happening today, and things are going into production, and large companies are buying Spark cores and building them into all their toaster ovens or whatever, and or other things I can't talk about. And and same with Treasure and Keen, both have a lot of interesting companies that you would not expect who are doing really large data things where all the data is coming from, effectively Internet of Things devices. And so this thing is actually finally here. Security is the last one, and I don't have a ton to say here other than it's really important, and we should all be thinking about it a lot. We are now in the post-Snowden era, and what that means is there's just been this huge fundamental breakdown of trust, right? Trust of governments, trust of networks, trust of centralized locations of data or compute like AWS. And that's a big deal, and it's changing people's buying behavior and their architecture. Some ways, in some ways that are maybe not good. There's also a huge amount of cyber warfare. I mean, you can see this stuff every day in the news, right? And there's no question that there's been a huge increase in it. And then this year, we've seen this series of vulnerabilities that are like just epic. I mean, unprecedentedly huge and terrifying. And it's also pointed to some cracks in the facade of containers, which are not fully sort of figured out in the security front so far. So these three things together are making the security world, pretty scary place. And there are lots of thoughts. People are thinking about these things. People are thinking about encryption everywhere and encryption at rest and zero knowledge architectures and all that kind of stuff. And those are great, but they all come with trade-offs, some of which are pretty heavy. And so, there isn't an answer here, and this is kind of a war that you fight forever, but I think it's really important to think about. I think it's not only important to think about for yourselves how you design your products and how you think about security, but also it's important to think about the opportunities that exist that have been opened up by the serious hair on fire problem in the security world right now. But always keeping in mind that this is fundamentally a dilemma where the centralization of resources is what gives us efficiency and innovation and is the way forward, but it's also basically a weak point, a choke point, a security risk. So I think that's, there's nothing new here, but I would just sort of underscore that it should be thought about pretty hard. I just want to talk for a second about New Relic. They IPO'd last week. They raised $100 million. Their stock is, their price is stable. They have a market cap of $1.5 billion. Sort of standard, normal, good. Okay, and I think this is actually really, really important for us, for our corner of the industry. And the reason is, in addition to them being a B2B SaaS company, they're one of 9 or 10 B2B SaaS companies that have gone public this year, and that's gone pretty well. More specifically, New Relic is one of the first pure DevTools companies, in my opinion, to go public in recent times. There's no way to really describe New Relic as anything other than a dev tool. And this is an opportunity to see how the public markets feel about dev tools and feel about their numbers. And in particular, New Relic follows a relatively pure version of a very modern sort of bottom-up, high-efficiency go-to-market, the exact kind of go-to-market strategy that we talk about and teach and work on here. And so this is sort of an early data point in seeing how public markets feel about that model and the numbers that result from it. And so I think it's actually really important. Specifically within that, when they went public, they had done $63 million in the previous fiscal year of revenue, and they were at about $100 million annual run rate today. And according to this is all public numbers. So that's kind of right on target, what you think of as being sort of standard path to acquisition, IPO. And it's good to see that those numbers hold true in this sector for this type of business at this time for developer tools. That's not a meaningless data point. The thing that's most interesting to me is the balance, the ratio between their number of customers and their average revenue per account. Because a thought exercise I always do with founders of dev companies is sort of you play imagine we're doing $100 million in revenue game. Where do you want to be on the spectrum in terms of how many customers, right? And we all know that having a very small number of customers or having a huge number of customers being on the either extreme of that spectrum is very bad for a lot of clear reasons. So everybody wants to be in the middle, but it's actually a very sensitive variable, right? Whether it's 4,000 or 6,000 or 8,000 or 12,000 customers at that level, those scenarios are dramatically different in terms of what that means for your average revenue and what that means for your go-to-market, and you would make totally different decisions years earlier based on where you're trying to land. And most founders of these kinds of companies today do choose the dead center at 10,000 customers at 10,000 ARPA. And that's not a pattern that you see that frequently among public companies. And that's exactly where New Relic is, at just over 10,000 customers and just under 10,000 average revenue per account. And so I think that's actually it's a really validating and interesting point. Now, understand, of course, it's a power law, right? They certainly have a power law, so people are spending a lot more than that, and then there's an extremely long tail, which drags the median to 10,000. So we can talk more about that another day, but I think it's a really interesting validation of this model. They had 500 employees, but they basically doubled their employees in the last year, so they're really just stepping on the gas as they go public. Really, they got to high tens of millions and high growth rates with just a couple hundred employees, which is what we would expect. And they've had about 85% gross margins, which is exactly what we think people should have. And so it's good to see the public market validate that as well. And this is a negative churn-driven business, as most of yours probably are or will be. And so that's what's driving their growth, as they're losing tons of money every year, and the public market is very happy with it. So I think that's good to see too, and they're right on what we would expect at 6.5 years to IPO. And part of that is intentional, but a lot of it's just that's the maximum growth that they could achieve with their revenue. And I think these are basically pretty good milestones for what you guys should be trying for if you're thinking in that direction. And the market's putting this company at a 15 to 18 times revenue. So I think that's really interesting. This is my last slide. I know it's kind of a whirlwind, but 2015 is going to be crazy. VCs this year, I don't know if you guys have been following this, but VCs have raised twice as much money in 2014 as they raised in 2013, the VCs themselves. So there's twice as much money ready to deploy now. And so if you thought that there was an oversupply of capital before, going into next year is going to be super crazy. And this is institutional money, right? This is Series A, B, C, and later, growth funds. This is big money. And then, of course, there have been so many acquisitions and continuing to be more acquisitions that that creates a huge number of angel investors and seed, in funds, and there's just a huge amount of seed money available. So, that's going to continue to be crazy. And like we talked about earlier, there are tons more of these, sort of pre-Series A startups, more employees, more scale, which is good for you guys. What we're seeing, I don't know how you guys view this, because you always feel like you're always feeling the talent crunch, right? But from our view, the amount of talent that is continuing to flow into Silicon Valley, into this area, and into the city here, is just absolutely staggering. I mean, it's staggering. And there are a bunch of different numbers you can look at for this. I mean, it's specifically contributing to the housing shortage in San Francisco, for example, in very measurable ways. But it's interesting that this still continues to be the number one place that talent is flocking to, with every place else being a very distant second, not a sort of just behind, but a very distant second. So I don't know if that's good or bad, but it's probably good for those of us in this room. Also, you guys probably have a sense of this too. First quarter is going to be crazy. I mean, the number of companies I'm aware of that are planning to raise money in January is off the charts, and that's just the ones that I happen to know about, right? And this is a story you hear from a lot of people right now. So there's a lot of people that are about to go out and raise money. There are a lot more companies. There's a lot more money available. It's going to be an epic Q1. It's also going to be a really good time for acquisitions, which is, I don't know if that's good or bad, but when you look at the public tech companies right now, they are trading at high multiples. There's a huge premium for growth right now. The public markets are favoring growth much more than profit right now, and one of the reasons is that it's a macroeconomic force, right? It's a very deep force, which is that there are not high returns available elsewhere in financial markets right now. And so money that's seeking high returns is being forced into high tech. High tech is where all the high growth and high return is. And so that's driving up the valuations, it's driving up the multiples on these companies' earnings or revenue, and that's putting a huge amount of pressure on the managers of these companies to grow. The market is telling them they have to grow. And one of the easiest ways for them to grow is to acquire other companies. And conveniently, they also happen to be sitting on a shit ton of money. So there's a link here to a good post that was written by Tom at Redpoint recently, where it's worth reading. There's some interesting numbers in there, but sort of the high point is he summed up the current cash on hand for the top 250 public tech companies, and it adds up to $430 billion. And specifically, the subset of them that are just B2B companies are holding over $100 billion in cash. Okay, so now not all that cash is available for acquisitions, but a lot of it is. And also, there's lots of stock available for acquisitions when your multiples are as high as these guys have. So, these companies are very, very acquisitive right now, and next year is going to be even more so. So all this stuff together means that it's going to be a very interesting 2015. I think it's actually very good for us in the developer tools world, because all of these things contribute to demand for our products and adds to the value of our products. So anyway, that was kind of a super whirlwind tour. Hopefully at least something in there was useful to you. And now I can take questions, or we can dive into something else. Thanks. I think the hardest thing is to figure out that, conveniently for the kinds of things that we do. I mean, the reason I'm attracted to developer tools and tools in general, I'm kind of a tool maker personality, and to me, the reason I like those things is that I think they're very high leverage, right? Like building tools that allow other people to do lots of things is a very high leverage thing to do, and I think all the companies in this room are, and in the Heavybit group are of that type for sure. And I think that it's convenient for us that the sort of business value of tools and the leverage of tools and the social value of tools have a tremendous amount of overlap, right? So like better tools help us think better, help us build things faster, help us solve, humanity's problems faster. I mean, this is a bit of a topic change, I guess, but you open the door. We face a lot of really big problems as humans right now. Coming up at us pretty fast. Like we could rattle off a bunch, but like climate change is probably going to kill us the soonest. So I think that personally, I still believe that there's time to fix a lot of the problems that we've created, and we're only going to do so if we have the best tools, right? And a lot of those tools are going to be software and data and understanding, tools to help us think. And so I want to see all these companies grow. I want all of you guys to not just build what's going to sell, but build what's both going to sell and going to provide a lot of value in terms of people's ability to think, to build software, to move quickly, to be agile, all those kinds of things. And I think all the companies that we're excited about, which includes all of you guys, part of what we were excited about is that you think that way to begin with. But it's hard not to let that vision get warped as you really go to market and have to scale and have to sell. And so it's this sort of delicate balance of how do you scale and sell more, but also kind of stick to that mission. So I don't know, that's kind of a lame answer. Yeah, that's a great question. And like most great questions, it doesn't probably have a good answer. I think, okay, so there's the basic stuff. I think open source is good. Open source is really good. Sort of back to the leverage and tooling kind of question, open source is one of the best ways to get a lot of people collaborating on a problem, right? And get the best thinking, usually, right? In the good cases of open source. And so I think open source is important and it needs to continue to happen, but the business models for being successful, for making money with open source are in a bit of a transition period the last decade, let's say. It's certainly the last 5 years. So the old school enterprise model of do an open source thing, have the main guys on your team, and then like sell tons of service and support at high cost to enterprises, that model's pretty shitty. It doesn't work very well. The margins are not good. They don't have 85%, software company like margins. They have like 60% gross margins and like abysmal net margins, or even worse than that, gross margins. And it's too human powered. It doesn't scale. It's just kind of ugly. It's wasteful. And so that model, and as a result, that model has been, sort of slowly weeded out. It still exists, but there aren't many new companies. There aren't many companies that were started in the last 5 years, let's say, that follow that model and are being successful. So the question is, what's the new model? And there are a number of companies that are trying things on that front. There are companies that are trying a dual licensing model where it's open source, but also you can't use it commercially without paying, commercially by some definition at some scale. And that does work in some cases, but there are trade-offs to dual licensing models. There's also people who are trying to do sort of there's an open source product and there's a closed source product for doing things that big companies need to do with that open source product. And this might be something like you've got an open source framework. This is probably similar to what the Meteor guys probably have in mind in terms of their business plan. You have an open source product, and then maybe you have the enterprise web server, the app server, the equivalent of an app server that's proprietary that helps you do all the scale out stuff, which developers and people running locally don't need, but big companies do. If there's a clean way to separate those things out, then you can have one part be open source and one part not be open source or be commercially licensed or whatever. So people are trying that. The Spark guys are doing, they're in the sort of hardware world, but their approach has been to have open source hardware effectively, right? So that for them it's really strategic because it means that people can build their hardware, their solution into production devices without constraints around the bill of materials or using a particular chip or whatever. But it also is kind of an interesting model. But they're still going to want to pay these guys for all the glue and all the support services, the cloud services, the ability to actually deliver software. So that's sort of a natural separation of an open source product and sort of services around it that are not human services, but automated technology services. So I don't know. That's kind of what we're seeing. There's a few buckets that people are experimenting with, but not clear yet. Does that help? I don't know. It's important. There's a lot of, there are many, and for you guys certainly, there are many cases where a company has built a constellation of things, many of which can be open source that are not the core strategic product. And when that is an option, that's almost always the right thing to do, because the community can own these things, can do a better job with them. They can find use in areas that are not specific to your company, and usually it's strategically a wise thing to do also. So if it's not your core product and you're thinking about open sourcing it because it might be useful to other people, it's almost always a good idea. Does the fact that we have a lot of capital, venture funds have a lot of capital, change our timelines? I mean, yes and no. So, I mean, doesn't mean that you can, so the ways that it certainly changes things is that it certainly gives you more choice of investors, okay? Which means that there's going to be, the negotiation is going to rest a little bit more on the founder side of the table or the management side of the table. And so what that means is you should make really good use of that choice, right? Some companies wait until 2 weeks before they need to raise money to meet all the people while they're raising money, instead of spending the previous year or year and a half getting to know a lot of different investors and slowly doing deep homework to understand who's actually the most valuable, who's going to understand. Because a lot of these timing questions around, can you think longer term? Can you make longer term decisions? Will your investors go along with it? Will they understand it? Will they support it? A lot of that has to do with picking the right investors, right? And so certainly when there's an oversupply of capital, oversupply of investors, you can pick the right investors, and so it's super good advice to do so. But also, in terms of the timing of your rounds, it's still not good advice to assume that you can raise money and not leave yourself enough runway to do so, because that reduces your negotiating power and then you lose the benefit I was just talking about. So, because you have to remember that VCs, including the ones who are really good and nice and helpful and strategic, are in fact professional negotiators for a living, and they understand what your runway is and what that means. So it doesn't change your timing around how soon you should raise money relative to your burn. Can you raise more money than you might have been able to raise otherwise? Probably. Is it a good idea? It depends, right? Being overcapitalized is generally bad. It almost always leads to sloppy execution, bad decisions, and can be sort of an albatross around your neck in terms of valuation, especially in up and down markets. A lot of entrepreneurs are very young right now and have only been doing their first company in the last few years, where these markets are totally insane. But typically markets go up and down, and sometimes you find yourself in a market that's down lower than where it was when you last did your funding, and you can end up in a position where you have to do a down round even if the business is doing well, and that can be really detrimental to the company. And so I think it's always sort of a balance how much capital to raise. I think that certainly in this environment you're going to raise more because the valuations are going to be pushed up, and VCs still are going to have ownership targets that they fundamentally can't break, and so they've already gotten squished down. I mean, tremendous pressure has squished them down to where they are right now. I mean, companies were regularly selling 35 or 40% of the company in their Series A just 5 or 8 years ago, and that went down to 35, 30, 25, and now it's commonly at 20 to 25, depending on the scenario. I mean, maybe you can get somebody down to 18 if they're under unbelievable pressure, but they still have these ownership targets, but they're willing to give you much more capital because they have much more capital and they want to deploy more capital. So that leads to a tendency to raise more money. And whether that's a good idea or not, I think really depends on whether you feel confident that you can execute cleanly and actually get a dramatic amount of value and de-risk the business more with that capital. It's also, always wise to have sort of rainy day money for up and down markets. Is this market going to be frothy like this forever? I don't know. Terrible macroeconomic things could happen in 3 months, and that will definitely affect these markets, but it won't change the fact that there's billions of dollars sitting around needing to be deployed. We saw this happen in 2008, where the VCs tapped the brakes on that, but they couldn't forever. There was a 6 to 12 month period that was kind of slow, but the companies that were good still got funded. It was the companies that were not good who were in big trouble. And so if you think you might need a mulligan on some strategic initiative, having extra money in the bank is really important. But extra money is probably not an extra $10 million if you're an early stage company. So, Okay, let's talk like high level economics, right? Comparative advantage, right? Specialization is really good, right? The more specialized these services are, the better job they're gonna do. Like I know that the guys at Circle CI are gonna do a better job at CI than somebody else who's doing 10 things, which includes CI. I also will add that there's a difference between, there's how narrow or wide the scope of a solution is and how difficult or important it is are orthogonal axes, right? Just because it's extremely narrow doesn't mean it isn't really hard or a lot of work or really important. And so I think in cases where something is insanely narrow in a way that makes it less important, that's probably bad. If you're unsure, right? Personally, I would always err on the side of more specialization. It's just there's sort of this other axis of like, is what you're doing actually important? Right, because we also see, I see a lot of dev companies come and pitch me, and they're doing something that is really cool, and it solves a problem that like I've had, or lots of people have, but like, it's not that important, it's not that valuable. There isn't like a long way to go with it. There aren't a lot of clear ways to add more value and surface area to that product. So those are the bad cases, I think.